The Link REIT is Hong Kong's first and largest real estate investment trust. It was launched in the autumn of 2005 and was a privatization of shopping mall and car park assets that had been previously owned by the local government of Hong Kong. New private sector management from Capital Land and Sun Hung Kai were brought in at the time of the privatization, so there's a whole management team. What's attractive about many of these assets is that they are interspersed into the daily fabric of the lives of Hong Kong citizens, meaning they're typically located between housing and public transit, so they have this great flow through of traffic all the time. For us, the Link REIT was an attractive investment because it met so many of our investment criteria. First and foremost, it had underappreciated assets, meaning, as you can imagine, a set of shopping plazas run by civil servants. There was very little thought given to tenant layout, there was very little thought given to mall optimization. What this means is that for the new management team, there's plenty of low-hanging operational fruit that they can pluck to increase rents by thinking about promotions, by thinking about bringing in brand name tenants, etc. in the plazas. Perhaps most importantly, the Link REIT is Asia's only internally managed real estate investment trust, meaning the officers and the directors have been, in effect, appointed by and are accountable to the REIT's unit holders and not some outside property developer, meaning the alignment of management and the directors is concurrent with that of the unit holders themselves. The REIT, we think, is a very clever way to play on the emergence of the Chinese consumer class. Hong Kong is the #1 tourist destination for residents of mainland China, and as anyone who's been to Hong Kong can tell you, it's impossible to spend even a day there without using the subway system, and this plays very nicely into the hands of the Link REIT's assets. The Link REIT has a feature we always like in a stock, but don't necessarily insist on, meaning we're paid to wait. The REIT has a very nice dividend of 5%, and we expect, because of the rent increases that they're going to be able to put through, that they'll be able to grow that at a low double-digit rate for the next 3 years at least, and that's a rate that's about 4 times faster than what most Canadian or American real estate investment trusts are able to offer their investors. There is little to suggest that the Link REIT is going to double in the next 90 days. These are elements that are going to transpire over a reasonable period of time. I like to say we're long-term investors, but not indefinite-term investors. And the Link REIT has that proper mix of long-term factors that will support the share price and accelerate the share price, but they're also ones that are visible over the known term.